Hello everyone.
Welcome to InstаФорекс Economic News Channel. I'm Kate Nedachina.
And I'm Anna Kasatkina.
We are going to give you a combined review of the stock and currency markets for the last week.
So what was the dynamics of the currency rates?
The Australian dollar plummeted by 1.6% in relation to the greenback.
And what caused the decline of the Aussie?
Among reasons are the comments of Australia's central bank head and the jitters about Fed's QE tapering. The rate of the Aussie climbed from 89.27 US cents on Thursday to 89.61 cents. However, the gain was too little to cover the losses the Australian dollar had previously. On Thursday, the Aussie slipped after Glenn Stevens, Reserve Bank of Australia governor, said 85 American cents is the preferred exchange rate. On Thursday, the American Democrats and Republicans finally achieved reconciliation. Now that the draft budget for the upcoming year has been approved, no more government shutdowns are expected. The center of attention now is the U.S. Federal Open Market Committee that is now holding a regular two-day meeting. The FOMC is foreseen to shed light on the future path of the monetary policy. Meanwhile, the American dollar stood at 103.22 yen on Friday, which is very close to the Thursday's level of 103.30 yen. Earlier, the dollar hit an intraday high of 103.917 yen. Last time it had reached such a high mark was registered in October 2008, when the collapse of Lehman Brothers Holdings Incorporated triggered mass sales of assets. At that time, investors rushed to buy up their safe haven yen. The monetary policy of the Bank of Japan is also in the limelight. The bank will have a regular policy meeting this week. And that's all about the latest trends on Forex.
Thanks for the brief yet informative overview, Kate.
You're welcome, Anne. And what about US stock market? What were the basic trends?
The overall bias on the American stock market was benevolent. However, the key Wall Street indices closed in the red.
Shareholders must have been worried by the indecision of the Fed.
That's right, stock traders felt uneasy ahead of the minutes of the FOMC meeting. Quantitative easing trimming was the biggest concern for investors. The shares of technology companies rallied on Friday. The securities of Twitter grew by 6.6% to $59 per share. The social network made changes to the functioning of blocking users. According to the new rules, a blocked user can still view or tweet at the person who blocked him. The most impressive growth among S&P 500 components was demonstrated by MasterCard. The global payments and technology company saw its shares rise by 3.5%. On Thursday, the top managers of the corporations decided to enact a 10-for-1 stock split. It means that every shareholder will receive 9 additional shares of MasterCard common stock for each share they own. MasterCard is set to issue nearly 1.1 billion more shares next month, which can result in a 10-fold decrease in its quotes. MasterCard is also planning to pay out its sharers the high dividends and repurchase as much as $3.5 billion of the stock.
Anna, thank you for the review of the American stock market.
You're welcome, Kate.
This was a weekly review of the currency and stock markets drawn up for you by InstаФорекс.
And presented to you by me, Anna Kasatkina.
And me, Kate Nedachina.
Have a great day and goodbye.
See you!